Yo, what's up, people, and welcome back to the Math Motion channel. And thank you for sticking up to until today as well. But yeah, so a quick update actually. Today is actually Monday, and this trade was made, I think, on Friday, and we failed to do the good trade on that. So I want to be like, I will let you know in advance. I took a loss again. This is my I think it's my third loss already on that account, which is pretty depressing, but that's fine. Today we have I will be showing you the news. So today we actually have a bank holiday, so there's going to be no trades today happening, sadly, but that's fine. But today we will be focusing more on recap. So I will be more like going in depth of where I did wrong and everything, and we will try to make, hopefully I don't want to make it too boring or prolong the video, but we will try to make a short but precise answer to that. And yeah, so the last trades, it was a loss. I literally just entered the market, and the market it went down and it went back up instantly, and I took the loss on that. So this is where we're gonna be watching the market. So yeah, so let's get into Forex Factory first. So there we go. Don't mind that for now. Forex Factory, there we go. So as you can see, today, October 13, Monday, all day, we have a USD bank holiday. So that means because there's a US bank holiday, the market is not going to make any movements. So unlucky for us, but we're not going to be able to make a trade. So yeah. So let's get into this. Let's get straight into the recap. So first, as you see, we did everything. We marked our Asian session, London session highs. Oh, we can see over here. We can see that all the Asian session and London session highs got taken over by. So first the Asian session got filled by London session, and then London session high got filled by a New York session. We can see over here, like with this on this candle, the huge wick. I filled that, then it went back down. We can see the market is well, I thought the market is gonna go down, gonna retrace towards here, which I have it marked. Then let's go to the lower time frame so I can get more in depth of a recap. So as you can see, my trade literally shows right here. So we don't want that first, but yeah. So what can we see? Okay, what they use. So we can see like I'm using these two inverse fair value gaps over here, right over here on that where you see my mouse right now, where I'm moving. So that this is the first inverse fair value gap, this is the second inverse fair value gap on 5 minutes. Both of them got filled by one candle, way down. We can see still kept going down. I was waiting for this break of structure happening. So we can see on the 5 minutes, the break of structure happened as well. So it showed the market is going to go down more. So I went to 1 minute. It's actually, we did perfect. We did the trade, like everything, like how we supposed to do. But also we have, so using over here, I marked my, we had like liquidity sweep over here happening, like right over there. I think it hit. Let's take a quick closer look. Yeah, it did hit, but it's barely reached it. Maybe it didn't focus on that, but yeah. So we have we see the break of structure happening there. So I marked my order block, breaker block. We can see that when the market went down, the market retraced back up to that point and then went back down. So in my thoughts, as the market showed me that the market is going to go down over here with those retracements, I thought the market is going to be going down. So there's also a fair value gap over here that I didn't mark actually, but we can see that retracement to the fair value gap and went back down, which another shows that the market is going to went back down. So it's going to go down. I mean, sorry about that. Sorry for my broken English. But yeah. So that's that. So that's a 1 minute, right? Yeah. Oh yeah. Also, over here, we literally saw that the market, when the market went down, there's this, but yeah, I didn't think about it too much. I thought it's going to be a retracement to this fair value gap and it's going to go back down. So I just entered the market on this candle over here actually. Yeah, I think it was a retracement back up, and then over here I entered the market, but it went down and then it just kept going straight up. So all these candles, just went straight up, and I got closed down over here. Unlucky, but it happens. So let's get into where I could have done better actually. Now the step where I could have done better is where I'm gonna get more in depth actually. So first of all, we can see there was happening a retracement over here, right? The thing is, it went back up. I could have waited for more, maybe retracement, because we don't see that much of liquidity sweeps over there and everything. So the market is not showing us any like that the market will do their movement that much. 5 minutes. So first of all, yeah. So the 5 minutes. Where's the trade? On 5 minutes, there was a break of structure happening. Was there any? There was inverse fair value gaps happening. So technically, we did everything by the strategy happening there, but the market, I didn't take an account in 1 minute either, like these over here, like we have a one fair value gap over here, second fair value gap over here, third fair value gap over here. Fair value gap. I mean liquidity sweeps. I'm sorry, but we have 3 liquidity sweeps happening over there, and it had a huge impact on that retracement. It filled all those 3 liquidity sweeps over there, and it went back up. We can see the market just went on a rise, a huge rise. So I should have been paying more attention, not rushing to a trade. So those are the first mistakes I did. I rushed to the trade. I saw the trade. I rushed to the trade because I thought the market is going to go down. Marked my whole, like, I saw that it hit all the highs and everything. And we can see that when it hit the London session high, the market on the New York session, they shifted the trend to down. And then as it hit those, like, actually hit over here, there was like a order block and everything here, like a fair value gap over here as well. So it just hit all those 3 liquidity sweeps, fair value gap, order block, breaker block probably also got hit, and I didn't take those in account, and which made me lose the trade. And yeah, those were the mistakes actually. I should pay more attention to the market. Don't rush to the trade again, because I did in last mistake again. Like I rushed the trade and I lost when I was in vacation. I lost those trades as well. So that is mistake number 2, and mistake number 3. What could be a mistake number 3? Mark everything. Yeah. Sometimes, but yeah. But we actually did. The thing is, there's a good part of this loss as well. I can learn from it. So even though I did my strategy everything over here, as you can see over here, like I went to 1 hour, marked all of my London session, like all the sessions, then highs and lows, and then went to 5 minutes. Using that information, I predicted whether the market is going to go down or up. So like I was looking if it's, I saw the shift the trend of the market because it hit the London session high. So I was looking for the down, for the short entry point. So and because of that, I was looking only for the short. I didn't look for any if long positions. So that's why I set up for like liquidity sweeps over here. But if I did pay attention to market more, maybe I could have avoided this. But yeah, but that's the thing. I didn't. So a loss is a loss, but you can learn from it. That's the most important thing. So yeah, mistakes. I didn't analyze the market well. The second mistake, I wasn't patient. And yeah. And if I did, I could have won that trade. But yeah, it happens. I don't feel down about it. It's fine. It happens. I understand that. I just have to learn from it. That's the thing. And don't let it affect my mindset of that. And yeah, try not to make the same mistake. So that's pretty much the recap for that day. Yeah. And that's the recap. Actually, because I have some more time, we're gonna remove this trade. It was a loss. Let's grab a day and try not to do pretty much like a demo trade, you know, like a test trade. If I could have, let's grab a day. We go for Friday? I don't know. No, Friday was right there. Let's go for Monday? Fine. Let's go for Monday. So what I want to show you with this is that how to execute the trade, and I will be showing you my actually strategy, how it works. So I know, like when I'm doing live day trading sessions, I'm just like instantly doing them and not explaining. So today I will be explaining a little bit. So I mean, not a little bit, but I will be explaining a little about the market, like how I do my strategy. So first thing you want to do is you actually want to just go to 1 hour or 4 hours. It doesn't matter. Just go to 1 hour. Mostly you can want to go to 1 hour. It's going to be, if you're a day trader, you want to go to 1 hour. Okay. So what we want to do is mark the entry, like the sessions opens. So Asian session opens at 000 in my time. London session opens in 8 a.m. and New York session opens at 1. Okay. So that's that. Then what we want to do is mark all the highs of that session. That's the low, and yeah, that's the high, that's the low. Actually, let's make it that. So that's the low, that's the high. Then what else do we have here? Another high, another low. So that's the Asian, that's a London session low and high. Then we have another low, another high. Well, technically over here, another high. Okay. So after we mark that, you want to go to 5 minutes. So technically what these are going to say is pretty much where the market could go. It's not going to be guaranteed because it's just only showing you the pretty much where the market could go, retrace and everything. So we go to 5 minutes. You want to scale down to 5 minutes. After that, you want to be, so okay, what do we see here? We can see that this low got hit. Technically, it got filled by the Asian, so Asian session low got filled by the Asian session. And then we can see from this liquidity sweep, it retraced back up, one down. So we retraced in one up. Okay, we see that. That's perfect. Okay. Then we see this liquidity sweep actually, wait. So over here, like this liquidity sweep happening over here, it went down a little bit. Technically it went down. And then, so it was just filling the orders, went down a little bit, it went back up. So we can see the market still showing the uptrend over here. It's filling all the highs of the Asian session. So pretty much all of them got filled. Then if we come up here, well, we got this, but yeah. So we can see a Asian London session pretty much. So they changed the trend. They didn't change the trend actually. The trend changes when there's a break of structure. That's when the trend changes. But there was no break of structure happening here. So the trend didn't change. So what we want to end up looking is for uptrend. So because it's still up, the uptrend is here, but we can see that the market went down on 5 minutes. And there's liquidity sweep over here. On the London session opens, the market starting going up. It filled the Asian session high. It went down, formed another low of the market, went back up, and then it filled. Technically, it didn't fill this, but yeah, well, kinda, but yeah, filled this pretty much. This high went back down, so there was like a order block and breaker block, so it filled that, went back down. The market, you can see it never broke structure. So the thing is, it never broke structure to the upside, but it broke structure to the downside over here. So the market is downtrend actually. So we want to be looking, because it's downtrend, it's going to go back up. So if it closes up here, that would mean it would have been a break of structure and change of trend. But it wasn't. You can see the market going down back again. Okay. And then, so due to that, we can see the market actually filling the orders here of pretty much like, I don't know, like, is there anything here? No, there isn't. It's just the market going back down like that. Okay. So we can see the market doesn't know where to go. So for now, maybe it's filling orders or something. It could be a consolidation happening over here. So you can see the market didn't know where to go. And if Doji, well, if you don't know what Doji is, I will show you actually. Doji's candle images. These what are the dojis? You see there's a common doji, long leg dragonfly, gravestone doji, so something like that. These are dojis. They all have different meanings. So if you don't know about them, you can learn about them. Do they affect the market? I mean, they could be one of the conferences you could use, but for me, I don't find it optimum. Like, I don't use it. I don't have to use that for my strategy. It doesn't work like that. So we have the doji here, pretty much. We form the, we form the down candle. We can see there's a high over here, right? It didn't go down. Okay. So it went back up. This is where the candle opened, and this is where the candle closed. And because the candle closed above this high, like this recent high, that's where the break of structure. We can see the change of trend. So the trend changed, it went back up, the market went back down. So what we can see from that, we actually had a order block and breaker block. It didn't hit the breaker block, so delete that. You don't need that. It's not like it's always gonna hit the, oh no wait, that's not order block. Breaker block is this one, actually. Breaker block, that's what we did. So order block and breaker block, they're always going to be happening before the break of structure. So it could be this candle where the breaker structure happened, and this is where the breaker block would be. So yeah, so it hit that order block. You can see it retraced from that order block back up. The market went up. We can see it wasn't strong enough, so the market went back down. You fill more orders and to have more strength to go back up. The market went back up. We can see that liquidity sweeps. It retraces back from there. We can see, because a break of structure actually happened over here, we can see that we can mark this because that's where the order block is again, and a breaker block is here. And we can see both of them got filled. We can see the market retraces from that because it filled the order block and breaker block. So it filled both of those, and the market retraces from that, and it goes back up. And then the market, you can see where it is now. So does the strategy work? It does. It's just that the patience is the key, and the thing is, strategy is not the only way to win the trade. It's like you have to. So when you get the strategy, you have to learn the basics, the psychology, like I said. And the thing is, you just have to get trade. Get that, like, you lose that trade. You go back, recap that, like what you did wrong, and like do in-depths of like your recaps. And that's how you're gonna learn and start making that money. And yeah, so that's technically it. That's all I wanted to show you. And so yeah, so technically if we made a trade, let's say entry point right over here, so that's where we would have entered, right? But like, you want to set up your stop loss just a little bit below of this order block and breaker block, because sometimes you can just hit that. So yeah, and then technically your take profit would be set up as a recent high. So technically maybe this one, recent highs, fair value gaps, order blocks, anything like that. Anything more than that, you're risking a lot, because the market could just change the trend and you could get nothing anymore. So the safest option, just take that, or set up as higher, but set those as a take profit where you want to sell the most, and then just let it rise whatever like you want. But yeah, safest option, if you're new, I would say just set up to your recent high, mark your fair value gaps. Like, is there any fair value gaps? There's no fair value gaps over there. So technically that's how it should be. So yeah. So I just want to say thank you for watching. Hopefully it helps you out a little bit, and hopefully it helps me out also into making those profitable trades. And once again, thank you for hit that subscribe button and hit that like button, and also don't forget that hit that notification bell as well, so you wouldn't miss out on any content I release. And hopefully it's not too boring as well. Just if you want anything that you want me to upload, just hit it in the comment section below, and I will just answer you on. I'll probably make that video as well, because it helps me. You guys give me ideas and everything, and it helps me as well, and I hope it will help you as well. So yeah, so thank you for watching, and peace out.